All right, buyers, it looks like we have officially moved into a balanced market. Who is ready for the shift in the housing market? I know I kind of am. This means having a list of homes to go see and not only being able to negotiate on price, but also on repairs, and sellers oftentimes offering concessions. Does it also mean that short sales and foreclosures are coming? We are going to dive into all of that. So shortly after the 2008 housing crash, we shifted into a seller's market. And believe it or not, we have been in a seller's market for 14 years now. But the last 2 years have been the strongest seller's market that we have ever seen. So just to show you how drastically our prices have changed, I want to share this slide with you. Now, just to show you how drastically our prices have changed here in the Valley, if you look here, this is 2011. This was actually our bottom, and we were at about $116,000 as our median sales price. This is not the average. This is the median. And right now, in 2022, our median sales price is at $480,000. So when you look at the time from about 2011 up to about 2019 right here, there was about $175,000 increase in the median sales price. And that was in an 8-year span. And then from 2019 up to 2022, we saw a jump of almost $200,000 additional in the overall median sales price here in the Valley in a 3-year span. Now, I like to think that every rational person knew that this could not go on forever. There would be a ceiling and it would have to end. So let's look into this. Let's break down some of those local statistics, talk about the impact of a potential recession, and then give some insights from things that I see and hear from other people around the country just like me. First off, for the good news, if we look at basic supply and demand, which we've talked about a ton on this channel, supply right now is increasing quite rapidly and demand is decreasing, although I think time will tell whether or not this is just a reactionary shift. However, we are still only at a 1.8 month supply of inventory on the market right now. So from this chart, you can see how drastically our inventory has actually started to increase and that we've already passed over a few of the previous years. And currently we are sitting over 13,000 listings on the market. But what might be really hard for you to see is right here, there has been a small shift and a slowdown in all of those active listings coming on the market. Now, every summer, what normally happens here in the Phoenix Scottsdale area is that our inventory actually does decrease because, well, people are traveling. They want to get out of the heat for the summertime. We do not have the normal season that other cities do. People get out of the heat. But with interest rates rising and some sellers rushing to put their house on the market before they feel that their home values are going to drop, this has actually made our inventory go up. See, we don't have the same selling seasons as many of the other cities. People go out of town in the summer. This is why I say, could this be reactionary rather than seasonal? But for buyers, inventory increasing is a great thing. Let me share this with you again. We still only have 1.8 months supply on the market. And with people moving here every day, this is still low. Now, we are headed in the right direction, but we are still below our pre-pandemic levels. What we'll be telling is the next few months to see if our inventory continues to climb or if it starts to slow again. So you're probably thinking with interest rates rising and demand decreasing and talk of a recession coming, like things have to change, right? They have to change drastically. And therefore, foreclosures must be coming. So I'm going to go ahead and wait for that. So the important thing to know about that and really understand is out of the last 6 recessions that we have seen, only 2 of them showed a decrease in home value. In the other 4, home values actually went up. Now, both of the recessions where we saw home values come down were actually caused by the housing market. And if we end up in a recession, we are not ending up there this time because of housing. Now, everyone remembers the housing crash of 2008, and it is still fresh on everyone's mind and in their being. It is a visceral feeling. I see it on people when I talk to them. But I just want everyone to know, really, when we start seeing a market change, a market shift like this does not always mean that we are going to end up like 2008. And to help you really see this, just really see it with your own eyes, I want to share this chart with you that's going to show you back 2008, what the foreclosure market looked like then to now. So these are the notice of trustees sale every single month. And as you can see right back here in 2008, look at all of that. Look at how high it was. We are in the 5,000 level of all of these homes that were going to either short sale or foreclosure. Now we're looking at 2022, all the way over here and all the way down. Again, we've talked about this on the channel before. This was the moratorium. Nothing was happening. Now we're out of that moratorium and still nothing's happening. As you can see right here in May, there were 31 homes that were actually sold to a third party. And in June, there was one home that went to foreclosure. So with all the forbearance talks and everyone saying that because of that, we were going to see a wave of foreclosures coming, you can see with your own eyes, it is not there. It is not coming. And if anyone is in a situation where they really need to sell their house, something financial has happened and they need the money, the home values have gone up so drastically that they can sell their house and actually walk away with money. Or they could potentially talk to their lender about doing a loan modification. There are multiple other options. Foreclosure is not the only one. Now, to look even further, I looked in our MLS, and really in the Phoenix Scottsdale area, there were about 30 homes listed on the market that were pre-foreclosure. Now, again, they've still got 90 days to come out of foreclosure. So if they get that home sold, they can probably settle with the bank and they're not going to have a foreclosure on their record. And then when I went to go look at short sales, guess how many short sales there were in our MLS as of right now? 4. That's it. 4. So for anybody out there saying, I am going to wait for those foreclosures, the market's going to crash, come down, and prices are going to be 50% off, the numbers just, again, they are not showing us that. So although we are seeing an increase in listings and a decrease in activity for buyers, some of this, again, is our seasonality. People are not focusing on buying homes right now. We were quarantined for 2 years. People can now vacation. They're like, I am getting out of here. Most of the people that I know, that is exactly what they're doing. They're just not focusing on it right now. They want to just kind of let the dust settle and just get on with their life a little bit. And then when they come back, they're going to focus on it again. And with the Phoenix market being one of the number one places that people have moved and one of the number one growth cities in the US, and we are still seeing people move here every day, whether they have the ability to work remotely indefinitely, are making a lifestyle choice to move to Phoenix, or if they've gotten a new job because of all the jobs coming to the Phoenix market. And both of those groups are still buying homes. So is the market changing right now? Yes, it is. Every agent that I talk to all across the US, we are all seeing it and feeling it right now. Offers are being accepted under list price, not above. And sellers are having to be very strategic when listing their property. And so just to give you a reference point of how to determine whether we're in a seller's market or a buyer's market, the basic metric is 6 months inventory. So if you're 6 months or less, you're considered in a seller's market. And remember what I said, we have 1.8 months inventory currently on the market. And now when we look at our Cromford Market Index, which is specific to Phoenix, we need to be under 100. Currently, we are 175. So technically, we are still in a seller's market. But if you are a buyer, just know it is starting to shift in your favor and will likely continue to shift that way, at least for the rest of this year. And I continue to see list prices be reduced and days on market go up, which are all signs of this shifting market. Now, many buyers have asked me, like, where have all of these listings come from and why now? So if you'd like to learn more about that, make sure you take a look at this video right here where I dive deep into that. If you have any additional questions, please feel free to reach out. My contact information is right down below. As always, I thank you for watching and I'll see you next time.